What's up, guys? Good evening. Welcome back. It's another Thursday night. It's another Thursday 9 p.m. night. So today is another tech company. As the title may have give some hints away, it's about another machine maker. But we'll talk about why this machine maker is different. Why this machine maker has better benefits, or I would say lower risk compared to the previous machine makers in the tech scene that we have shared to you guys. Companies like Me Technovision, companies like Great Tech, companies, well, basically these two. So we're going to go into detail what ViTrox does, what is their business model, who they serve, what is the kind of machine, what is the kind of value they bring on the table to their clients, and what sector, what kind of win or what kind of catalyst is pushing the company's current valuation. And we go through the balance sheet, the profit and loss, the cash flow statements, the benefits, the pros and strengths, and also the weaknesses. If you have any questions, you can put down in the comment section. We will definitely answer them. If you do have other questions that is not regarding ViTrox, you can also shoot them in the comment section. We will try and look through it and try our very best to answer your questions.
I think we can start now.
Okay. So another machine maker, but why this one is different? Chun-Beng, before that, a little disclaimer as usual, it's just for sharing purposes. Do not take it as any buy or sell call decision. Do your own due diligence, and let's get started. So ViTrox is, I would say, one of the very, very famous tech companies in Malaysia. Chances are, if you are a trader, you might have traded this stock before. It has its glory days. Back then, there are times when their shares can go up very fast, come down also very fast. But if you look at it at a long-term trajectory, it is a multi-bagger. The share price has gone up plenty of times already. If you have bought ViTrox at the early days, you would be a very happy man today because the share price has gone up a lot of times. It's a multi-bagger tech stock in Malaysia. So if a company can keep on growing and earning money, must be something, right? It means that the company's business is good and the company's business can grow. And the more business the company makes or do, and then they reinvest their money into their business to buy new factories, come up with new production lines, and then service more clients, and not just Malaysia clients, but also clients all around the world. So the business is there, but in what sense, what is the business of ViTrox, Berhad? Maybe Chun-Beng, you want to take us through what does ViTrox do?
Yeah, so if this is your, I don't think, maybe it's not your first time heard about ViTrox, but if this is the first time you wanted to dive into deeper on what they really did, this is the three things basically that they sell. So the first one is actually called machine vision system. So what it meant, basically they are using this machine vision, like the term itself means you are putting an eye to the machines. So what it really does is they are using this technology to help any kind of machine to detect if there is any defects during the manufacturing process. So instead of you employ a lot of labor, do manual checking, or you have any other process to enhance this thing, they are using technology to do it, using their cameras to actually read through every single process. And if there's any problem, they'll just pick it up and then to improve the overall quality. So this is the very first one that they did. So when they started off with this machine vision and then they got on the traction, they started to move into the second thing called automated bulk inspection. So in short, what they did is they are trying to do something to help the company to inspect if there's any problem during the manufacturing process. So machine vision is one of it. Second one is they have some technology to actually point out if there's any defect in printed circuit boards. So if you are from engineering background, you probably played with it before, but you don't think of when you do all the FYP, the big board, but now all these things is on a very small size. So that's why all these things is important to be automated, and this is what ViTrox providing to the company. And then last one is basically a supporting products that sell along the way. So for example, when you sell machine vision, you need to deploy it to the machine of your client. So let's say your client manufactured wafer, and use this machine vision is to detect if there is any crack on the wafer. They must do some integration. And this ECS, electronic communication system, is their in-house system to make external system talk to their machine vision system. So they're quite smart. Basically, I do a system, I do another system to help to do integration, and you need to buy both. So it's not buy one, free one, but you need to buy both. But all in all, this ECS only contributed very low percentage of the entire sales. Majority still come from MVS and ABI. So maybe you can go to the next slide to give you a more visual illustration on what this does. So like what I say, basically you're putting an eye to the machine or to the system that it will try to detect every single produced item automatically. So in any manufacturing company, they will definitely need this, because this is an accurate way for them to filter out defects products. So this is an illustration to it. So maybe you can move to the next slide. So probably this one, Jupan, you want to take us through. I think this is the reason why we say this one is special or this one is different.
Yeah, I think if you guys have been following us for the past few weeks, we have talked about companies, very, very good tech companies like Inari, companies like Me Technovision, companies like who else? Yeah, we talk about a lot of tech companies. And these companies that we previously talked about, they are good. But if you really look through the slides and go through the presentation with us and stay till the very end, we also highlighted what are the key risks of companies like Inari and Me. They rely heavily on one client, and this client die, they will surely follow and die. But the thing about ViTrox is, you see, by revenue by country, they serve quite a very diversified countries. Of course, you have China at 33%. Oh no, that was 2018. So in 2019, Malaysia is 26%. So if Malaysia tech industry were to undergo downturn, at least 26% of the portion may be disrupted for ViTrox. But their business in China, which is 25%, will not have any issues. Mexico is at 16%, and then you have US, Taiwan also. So it's a very diversified geographical base. They do not rely heavily on one country. And if anything bad happens to that country, their sales will not be impacted. And this is already a very, very big advantage or benefit of ViTrox versus the other tech companies that we have previously talked about. So you see, largest customer is just 7% of their group revenue. And the top 10 customers only contribute around 40%. So worst case scenario, suddenly these top 10 customers don't want to continue business with ViTrox. Yes, definitely business will be impacted, but not like other companies where 90% of their revenue will just boom disappear. This one is just 40%, and they can definitely have time to find back any customers which suddenly decided not to pursue or continue business with them. So by geographical spread, definitely is a eye opener and it's a big advantage. Next, we go on to, okay, you say that ViTrox is selling machines that checks for defects, that does automated vision. So must sell to someone, right? And that someone must be in a certain business industry, right? So they sell to a lot of people. They sell to companies which are in charge of telecommunications. They sell to companies which are in charge of automotive, mobile devices, computing, and also, if you look at it as a total, very, very well diversified, and the risk is spread out evenly. So I think telecommunications play quite a significant role, 26%, which is why it is also a 5G proxy. People who are more bullish on 5G stocks might want to bet on a tech stock like ViTrox. So if you guys don't know, ViTrox, this kind of companies who manufacture automated testing equipments, they sell their machines to OSAT companies like Inari, for instance. So they make the machines, they sell to Inari, and then Inari will use their machines to check for defects after they do their packaging, and then before that, before they send the packaged chips back to their respective clients lah. So Chunbing, I mean, looking at the geographical breakdown and the sales distribution by segment, compared to the previous companies that we touched base a few weeks ago, what is your thoughts?
Yeah, I think one of the biggest thing that make ViTrox different is the diversification compared to, let's say, great tech that we covered, I think, last week, which solely depends on one company. It's not about one country or one industry. It's one company. So I think also because the nature of ViTrox is doing defects, probably the application is much wider. But it might not true if you compare with other company, like they're doing automation or whatnot. Those are also quite generic and should be able to support quite a big range of customer. But this guy, I think it also, thanks to the 5 to 10 years of hard work after they get listed, this is how they actually diversify the entire portfolio. Which I think is also not fair when we say great techs or whatnot is very focused because they got listed just 1 to 2 years.
Yeah, true enough.
Company that we share is very newly listed in both nowadays. But for ViTrox, it's very long history. Like what we have shared, they started out with machine vision, then after that they go into board inspection. So this is how they diversified along the way, which is something that we can take this as a role model if you wanted to analyze other company, new company in this type of business. So I think it's quite encouraging. And then if you look into their annual report, they share about a lot of diagram, or even they come up with a yin yang chart to share how they actually what is their methodology in doing business, which can be quite high level, but I think they try to always comply to their core value, which they share in the annual report every single year. So I think all this is quite encouraging. And then they even got their so-called ViTrox Campus 2.0. They have 1.0, 2.0 to support the wellness of the staff. It's quite nice. It's the first slide that we have shared. This is their Campus 2.0. It's quite big and it's nicely designed, but of course, it's not fully occupied yet. So I think this whole campus concept plus the area for them to do the machine manufacturing is quite encouraging. They're trying to build a home to their staff or to their talents.
So a little bit like Googleplex.
Yes.
like Google. So yeah, I think very, very good point that you raised just now. Of course, it's unfair to just take newcomers like me, who just like got IPO recently. But if you want to see this kind of company grows, this is a way that it should grow. They should find more clients geographically, and then they should also try to find more clients to make sure that they don't rely heavily on just one single client. So we move on to the financial performance of ViTrox. Well, you look at these numbers, since 2006, they are doing just 26 million of revenue. And when you come to 2019, which is just 13 years ago, maybe I was still in universities. Now we're near a millionaire, but you see the company from 24 million revenue, they shot up to 340 million. I mean, that's just fantastic. The business is growing like mad. It grows at a very fast rate, and profit margin is also very juicy. Around 24%, up to 35%. So this is a company which is very good at what it does, and they can afford to sell their machines at high price and then get a high margin and then get a better return on equity for investors. So definitely, when you look at this kind of financial performance, straight away it's already a good sign, and it's a good company. Like a business is very very strong. And we will have to look at ultimately the earnings per share. Basically, if I have one share of ViTrox, how many earnings or in terms of cents am I getting when I were to invest in a company like ViTrox? So you look back at 2006, it started off at 2.05. Of course, during the years, they have share splits, bonus issues, whatsoever. That's why you see there's an asterisk there that is adjusted to reflect the latest outstanding shares. But you see, every year they have been growing. Of course, say for the year 2009, where we have our famous financial crisis, the company also got impacted. But just 1 year after 2009, after the financial crisis, straight away from 0.43 cents jump up to 7 cents. And then along the way, of course, semiconductor tech scene can be quite cyclical, but you look at from 7 cents a share earnings up till today, even 2019, is 16 cents. So it goes up around 3 times already, earnings per share. So, and ROE is fantastic as well, 29%, 25%, and 16%. So, Chun Bing, after you look at the geographical spread, the client customer spread, and now the financial performance, what do you think about a company like ViTrox?
No, I think the first thing that's right into my mind is, can they continue with this growth? But of course, we are trying to find pieces by pieces of the information from where we can gather from news, or we can gather from the annual reports, or if you have the time, maybe we can attend their AGM. All this is the pieces of information we try to find out whether this guy can continue with this or not. But one thing that I found out is, I don't know in which slide that we mentioned this, they actually quite aggressive in R&D. And then also I managed to find out they have at least 10 to 15 kind of patents registered by their company. So all these things kind of protected them compared to the other company that we shared previously. They probably have the technology, but they didn't shout that they have the patents. So usually you have it, then you will shout lah. But if you didn't shout, it means you don't have it. This is what my take lah. And ViTrox have those patents. I think it's kind of important where they into this intellectual property stuff, and they try to protect their invention. So I think all this is quite encouraging. But of course, for a layman, when they see this slide, maybe they will ask, if ROE going down, is it a good sign? So maybe Jupan, you want to take this question?
Okay, it's a very fair question. So basically, we also discuss about this when we look at the ViTrox ROE. So if you look at ViTrox ROE, of course at peak it was at 42% because that was straight away after the financial crisis. Company business got very good, and then they managed to book in more sales. But eventually you see it fluctuating between 23%, 18%, 28%, and 2016 until 2008 it was at 25%. But suddenly in 2019, it went down to 16%. So as a normal person, you see like, how come drop, right? Is it the company business is not good? Is it the company stopped growing already? So you have to go back to the mathematics, to your formula of return on equity. What makes return on equity? What derives return on equity? So basically, return on equity is your profits attributable to shareholders, what the profit the company makes that shareholders is entitled to. So you divide it with the equity portion. That's how you get your ROE. Drop, right? So if your profit drop, definitely your ROE will drop. But another possibility is if your equity is high and if your profit maintain flat, then your ROE also will drop, because a smaller number divided by bigger number, your ROE will definitely also drop, right? So if you look at, of course, 2019 was a year where tech scene was a little bit on the downturn. So revenue rise, ViTrox suffered a little bit, not too much. Profit also got impacted. But also another factor that impacted the ROE was this company has been earning money, earning cash, and then reinvesting the cash in a company. So a very big portion of these earnings becomes their retained earnings. Retained earnings is a portion of equity. So the company keep on earning money, then the retained earnings, the equity part also becomes bigger. So when you have a lower profit, divided by a huge or bigger equity, that's what caused your ROE to get impacted lah. So when you see a lower ROE, doesn't straight away translate to company lose money. It's no good. Yes, partially that could be the reason, but you also have to look at the equity part. Is it becoming bigger? If it's becoming bigger, then you also have to give chance to the company. Okay, your equity part, your retained earnings becomes bigger. That's why ROE comes lower. But the next question is, how are you going to reinvest my earnings? You use my money, you invest in the business gets bigger. So now equity has more already. You want to give me dividend, or you want to continue to grow the company? As shareholders, I would ask these kind of questions when I see ROE drops lah. So we move on. Usually, if the company's financial performance is so fantastic, can grow so much profit, usually they have a lot of cash fund. And it's quite true lah. You look at the cash portion of ViTrox, from 150 million in 2017 goes up to Q2 200 plus million. Within a span of 4 years, they increased their cash by more than 25%. And portion wise, if you take cash over their total assets, not too bad, not too shabby, 30%, roughly 30% of their assets is in cash. So companies have a lot of cash. And you look at the 200 plus million, straight away they can settle all their debt, 47 million only. They can straight away tap out the debt and say, okay, I don't want to borrow money from bank. Okay, you want money in bank, take it. I still have plenty of cash in my bank account. And the equity part, you can see 330 million goes up to 513 million. So if your equity goes up, definitely ROE will get impacted lah. Jumbeng, anything you want to top up? And you look at the balance sheet now.
No, I think it's very good balance sheet.
Yeah.
In the past few weeks, all the companies that we share, it seems like having this kind of characteristic. Maybe the next company that we're going to analyze or going to share, we should find another type of company, and what is their problem. Probably we should see it from that.
Yeah,
angle.
maybe you should share a problematic company, or maybe you guys audience, you have a problematic company you want us to share. Leave a comment. We'll find a problematic company, and then maybe we'll straight away show to you what a problematic company's balance sheet looks like, what is the financial performance look like, instead of all this while we have been sharing good companies, and you say, okay lah, this should be normal ma. Yeah, find one problematic one, then you know how terrible it's terrible. So next we go to the cash portion. So companies grow their business, growing revenue, growing profits. Definitely the operating cash flow will grow. You can see here it's also growing. And investing portion, they have to put in more money to invest in their business so that the business can grow bigger and bigger. And financing part, negative, is basically they pay back loans or they pay out dividends. And what is impressive about this company is that the free cash flow portion is huge. You see that the red bar in 2017, there was a big capex or expansion that they did back then. But in 2018, they slowed down a bit. And when they slowed down, not much money going into investments or growing the company, that's where the cash starts to build up. So from free cash flow 20 million, 19 million, then suddenly slow down the investment, and the capex goes up to 74 million. So it's really up to the management how they want to pivot the company, how they want to further grow the company lah. It's already at a very good overall good shape. But if you want this company to continue to grow like mad, as a shareholder or as a potential shareholder, you should ask what's next for this company. So before we go into what could the company do, what could make the company grow another 10, 20, 30%, we look at operations first. So I think this one is a very interesting chart that ViTrox also shared in their annual report. Jumbeng, you want to go through this with us and try to decipher what ViTrox wants to share to retail shareholders or retail investors?
The key highlight they wanted to share is particularly on day sales outstanding, where they managed to lower it down from 139 to 133. Of course, they compare against 2018. into 2119. I think in layman term, when you see all these things, is how efficient you manage your inventory or manage your sales. There will be always something to fulfill. So let's say today you receive 10 orders, cannot be fulfilled 10 straight away unless you are Speedmart. But of course, Speedmart also come with retail supply chains that they need to top up all those things. So what they really did is they managed to keep this thing efficient, meaning I don't have a lot of unused stock, leave it there. If I didn't plan well, or some of the product that I produce a lot but it didn't meet the market requirements, is usually they call it product market fit. If this thing got some misalignment, usually this day sales outstanding will be at a high number, meaning you are producing something and you wait them to actually someone to buy this slowly, but you didn't try to optimize be it your storage space or whatnot. So this chart is quite good that they used to be very gung-ho. I think in 2012, 2013 they suddenly have a spike. Then all this while they are trying to manage this from a year-to-year basis. But overall, not too bad. I think it's a good company with good management to manage their inward and outward of inventories.
Yeah. I think what is good when we look at annual reports like this is that companies like ViTrox, they share with you, okay, this is how efficient I manage my inventory, and this is how efficient I manage my days sales outstanding. So ViTrox upfront already tell you this is how long in terms of inventory and in terms of sales. So with this information, you can use it to compare against other companies. So let's say you come across another company that you want to also analyze, and this company maybe is in the same segment as ViTrox. So you also look at the same information. So okay, ViTrox say they are managing their outstanding sales at around 130 plus days. So what is this new company that you want to analyze? What is their outstanding days of sales? Are they running their business more efficiently than ViTrox? Are they managing their inventory better than ViTrox? So now you got a pair of ruler that ViTrox provide to you. You can take that ruler and then you compare against other peers. So this will also help you to dig deeper and to further determine which company is more efficient, and ultimately which company you would choose to invest as well. So finally we reached the slide where we just now talk about. So this is how ViTrox also very I would say very honestly tell you upfront, this is how much I spend for my R&D. So JuJuR, you want to take us through?
Yeah, like just now I bring this up. This is one of the element why we think ViTrox is good, because they literally spend at least 10% of their revenue into R&Ds. Of course, in the earlier day, they might not be hitting the 10% mark, but ever since 2010, they're putting quite a bit of number into this R&D. And when you say this thing is compare this with the revenue, is quite sizable, because their revenue easily got these 3 years, they has been exceeding 300 millions, which is quite big for R&D perspective. If I remember correctly, when we talk about great tax, they go listed, and majority of the fund, they go for operating capitals, and then maybe only 5% of it go to R&D. Imagine someone go and raise money, is for operation rather than R&D, because raising funds is always, if you manage to raise, it's always easy, fast money. It's a time where you can spend on R&D and keep up with your products, but they didn't do it. But if you compare back to ViTrox, that's been consistently doing this. So this is some company that I think is in need a lot of grit or a lot of perseverance in doing this, because if not, with the stress of shareholder or internal staff, all those things, they might request for dividends or whatnot. They might just lower down the R&D because they has been the leader in this field, but they has been consistently doing this. I think this is a good sign, and we should take this as an example, and then to compare across the industry and see who else have the commitment to do R&D on a consistent basis.
Yeah, true. So yeah, I think R&D is maybe coming from a more maybe a new investor. R&D is expenses. Basically, you spend money to do research and development, and this research and development may not turn into a product. Basically, you just spend money, and this money is spent to look at a lot of opportunities and a lot of testings. And if a test fails, of course, you burn your money lah. But that doesn't mean you should scrutinize a company when they spend money on R&D, because you remember just now when we first talked about what business ViTrox in, they started off with just normal testing, visual testing, and then only they went into testing for the printed board. So without R&D, maybe they would not have the insights, the technicalities to grow new business segment, go into newer testing methods and also vision testings. So you shouldn't, yes, of course, definitely R&D will eat your profits, but you shouldn't scrutinize or just punish a company because they are spending money just to ensure that they can grow more. Because at the end of the day, you look at the revenue today, 340 million, maybe a part of it or big part of it was the seed that they planted as R&D a few years back. They got the big breakthrough. They managed to launch new services, new machines, and today is where the company stands with the share price and the historical revenue and profit as a proof lah. So we talk about good business. We talk about good capital management. Ultimately, what makes the company it is today drills down to the shareholders. And if you look at the top 3 shareholders, I think all of them are the founders and also the key management within ViTrox. Mr. Chu is the managing chairman and also CEO, holding 26% of total share, and the top 3 highest shareholder actually controls more than 50%. So they have complete control of the company's direction and future and the company's vision. And I think one thing we found it very surprising is this slide, and I think this slide deserves a share. So if you go through a lot of annual reports and you check how much founders and CEOs pay themselves, if it's a family-owned business or they own the company, they usually will pay themselves millions and millions. And sometimes you cannot say that's wrong, because they will grow the company and then they are worthy of that kind of compensation. So companies like like your glove companies, definitely Tan Sri Lim Wee Chai will pay him millions, and you cannot say it's wrong, because today he just led the company to book in 1.3 billion profit attributable to shareholders. So he helped you earn 1.3 billion. He take 1 million. It's not a big deal, right? But you look at the company like ViTrox, help you earn so many money. Mr. Chu only takes the 340K per annum, and his others executive all add up. Maybe it's less than 1 million. So 300, and 300. So total around 900,000 only. Junbing, we have gone through pretty much a lot of companies, how the directors remunerate themselves. When you look at this kind of slide or this kind of salary, what do you think?
I think that it's double-edged sword lah. We were surprised how come they draw so little to their salary, because you got to be motivated by something for you to keep on innovating or bring the company with more profit. But I think ultimately it's not a bad sign, because of course 300,000 for laymen is already a huge amount, even for, it's not even the top 20 already. I think they are the top 5 or even top 1% to get this kind of salary. Probably they have made enough from the consistent performance of the share price throughout the year, so they don't really care. Because it's just a regular thing. I make more from the share markets. So I believe this is the key reason why they keep this thing lean, and then all the money they go back to the R&D, all those things to build the share price further. I think all these things is not a bad sign, but of course, 300,000 is still not small. If they draw 100,000, then maybe you need to worry something wrong cannot
Yeah.
be draw so little and then put so many efforts. So unless you are like China presidency, I think he draw one of the lowest salary in the whole world, but it have different things. He has power.
Yep.
All these things is different compared to Singapore Prime Minister. I think one of the highest paid Prime Minister in the world. So it depends on how you see it. But ultimately, this is not very low, and the share price has been consistently going up. I think all these things is not conflicting each other. So I don't see anything that's fishy. But why we bring this up, I think this is kind of unique if you compare to the other company that we have shared previously. This guy really didn't draw a lot of money.
Yeah. But if you look back at let's just go back a bit. Look back at the numbers of share that they're holding, and you just take that number and you times the ViTrox share price today. These guys are multi-millionaires. Basically, their net worth are being determined by the share price of the company. So it doesn't matter. They just take 6 figures salary compared to the market mean where most CEOs are getting millions. But net worth wise, definitely multi-millionaires and I would say very commendable for them to take this kind of salary. Only the tech companies in US where I see more outstanding CEOs, they take $1 per annum, but they get a lot of shares So it's how CEO be in line with the shareholders. So they work more in terms of the vision and the mission and the growth of the company. Their profits or the net worth gets determined by the share price. So of course, being very heavily reliant on the semiconductor industry and having so many clients all around the world, China, Taiwan, Korea, Japan, and Europe. So they have also been very kind to share with us in their annual report the semiconductor sales forecast and trend. So you can see 2018, 2019, it came down a bit. That's why their revenue also got impacted. So at least they're upfront and they say, okay, it's really a cyclical factor of the semiconductor business. Overall market slow down, then definitely company also stop growing for 1 month. But moving forward, 2020 and 2021, even now, you also heard news that 5G is one of the key factors that will benefit a lot of companies within these few years. So they have also gave a more rosier approach and projection how the company will look like and by regions as well. So you look at companies like China seeing a small rebound in terms of their upcoming forecast for semiconductor. Same goes for companies like Taiwan, Korea, and Japan. So if the overall market can get past the current pandemic, and then money is well spent to grow the 5G whatsoever, be in terms of infrastructures or whatsoever, then a company like ViTrox will definitely be in position to grow with the overall tech cycle and tech scene. So Chun Bing, what are your thoughts? Do you think that the tech would grow and face a U-turn after what happened in 2019 and what is happening now?
I think maybe we can move to the next slide and probably I share my thoughts on ViTrox. I think a lot of tech company growth, a lot of them tag to the growth of smartphone. And like it or not, smartphone is sort of saturated. Even though you got Note 10, Note 20, S10, S20, P40, iPhone 11, 12, 13, whatever not. The only exciting part is about better camera, faster speed, bigger screens. That's all. Not like last time, suddenly you have a phone with smart element, which is the app store, make this thing become mini computers. So the good part about ViTrox is they didn't tag their growth with smartphone, but they tag themselves with Industry 4.0. Basically, it's a bigger place to play. So I think I won't go into details. This is just some of the information slide for you to see. We've been through multiple era of industrialization, and then now we are stepping into Industry 4.0, which is more automation, Internet of Things, and so on and so forth. If you go to the next slide, which is something we found out this ViTrox trying to do, make themselves relevant in this Industry 4.0 era. This is the latest introduction of new product within their machine vision or whatnot department, and it got launched in 2019. So what's so special about this V1? Basically, in their annual report, they got about 6 to 10 products being introduced in 2019. But we particularly picked this up is because I think this is their step into Industry 4.0, and then this should be a product that can make them relevant for next few more years. So basically what they does is, this product actually can tag to any machines, and they will pull the information, and all the information data will be consolidated in cloud. And then if you go to the next slide, it's a quick glance into what this V1 offer. Basically, they have a way to capture data. So this data is not the payment data that you contributed to bank on your credit card spending or whatnot. This is data on machines, which is more industrial purposes, not personal buying behavior. All these things is important because in order for you to improve certain part of the machine, rather than rely on people who tell this machine always have problem in step 4. Then based on experience, then you try to improve it based on imagination. But if you plug some sort of magic wand to actually try to read all the information and interpret for you automatically when this thing got problem, how should you improve it, and what is the best way to improve it. All these things can be done using big data and made possible by all the bigger processing power. So this ViTrox, I think this is one of the newest offer from them. Rather than building machine to detect defects, they try to predict the defects and they tell you what you should do to improve it further. So instead of reactive, they try to bring in this module
Preventive.
to make it preventive. So I think this is quite interesting of all the product introduced in 2019, because the rest is about better quality, better inspection speed, better range or whatnot. But this is the one that I think make them sort of relevant, because if you think of it, if they use this thing right throughout their machine vision, they are limitless. With the rise of electric vehicles, I think this is just small part of it. If you have shared with you already, automotive is about 20% of their sales. What makes this thing more interesting is driverless car, because driverless car is all about machine vision. If you think about it, now they use this machine vision to inspect errors, but this can be a machine vision to detect whether there are any animals running around where your car needs to stop. If we can manage to utilize their existing technology and go into this space with the help of all this data, big data stuff, I think they are quite in the right track. That's why I think they are quite unique compared to the other tech machine company, because they have trying to make themselves more relevant in this Industry 4.0 era.
Yeah. So I think yes, definitely V1 is an interesting way for a company to pivot themselves out from the usual machine making business. So even though you look at ViTrox, of course, over the years since 2006 until now, it grow. There are some years where business is good, some years business is not good. It's cyclical, because at the end of the day, when you sell machines, like we just mentioned previously, you got to be on a very active hunting mode, because the same client will not every year buy a machine from you. Once they buy a machine, once you buy a car, you won't change your car every year. You buy a car, you stick with the car 4 or 5 years, and if you're very careful, maybe 7 8 years, then only you switch to the next car. And to be able to grow to what it is today, they put in a lot of effort. They grow a lot. And along the years, there's really 1 to 2 years where they didn't hit higher revenues. But overall, they also know that I have to find some ways to make my business more repeatable, more predictable. And we really think that if the V1 initiative is managed well, managed to get more people to to actually take up this new product, definitely the company will still have ample space to grow in the future, even though today it is at 13 ringgit a share. But if the business can continue to grow, share price will definitely continue to grow as well. So this is just what are the possibilities, what we want, what a software with cloud and AI can definitely bring to us humans. So be it automation, be it Industry 4.0, be it in other industries, other segments as well, road safety, facial recognition, or whatsoever. So the opportunity is endless. It's just how you want to apply the concept, technology into what is relevant to us today, and how it improves things. So after going through a different company, which is presumably better in terms of risk, in terms of client risk, in terms of geographical risk, and benefits, strengths, definitely it doesn't come with zero risk. So what are the risks of a company like ViTrox, Jumbeng?
Yeah, I think they very much put themselves, try to be relevant in Industry 4.0, which is also need to be made possible by 5G connection. Because without 5G connection, all these things, application is just in white paper form, in cool videos, but you won't realize in real application. So the biggest challenge, I'm quite happy when we do the slide. This is the first time that we can rely on key clients of currency. This is all the problem not exist in ViTrox. But the key thing is they run on this 5G wave. The enabling of 5G in the entire world, all those things play a part in ViTrox growth. So what is the challenges of 5G? There are a lot of physical challenges. Be it you need to spend a lot of money, deploy small tower, because the wavelength is technically much shorter if you compare to 4G. And then what's make it worse is because of the trade war, or they call it the new Cold War in technology field, triggered by US and China, will make all these things slow down. Imagine you are employing two different army to build on the same stuff. Rather than last time globalization, you put everyone together, different language, you try to find a common language, let's say English, to talk to each other, and then you build the same goal. But now it's not. China have their own agenda and try to get their follower. US have their own agenda, and then they spend the same amount of efforts, energy, resources, and whatnot to achieve the same goal. So all these things will slow down the 5G progression, which is also bringing a lot of new company that try to ride on this wave. We have a slower growth. So typically, this is the only two things that I see causing ViTrox problem. But for other risks, rather than from the business part, which is these two, is whether today's or this quarter share price is too high already. Everything is good, but maybe it's too expensive. I don't know whether Japan, you want to take this question or not.
Okay, I think maybe we have questions from the audience who are also asking about it. But before we look at the questions that you guys may have posted, we just bounce it through the valuation and whatsoever. So you look at today, ViTrox closed at roughly 13 ringgit a share. PE is 83 times, so not cheap, even more expensive than Gloves. ROE, yes, got impacted. Definitely, that's why it came down from 25% to 14% because they also shared semiconductor growth slowed down because of trade war. But trailing profit margin remains good, 22%. Compounded annual growth rate is at 15%. And they do pay a little bit of dividend, but if you buy or if you want to buy a tech stock like ViTrox revenue, if they have also, it's very little, so 0.32% is negligible. So if you were to ask me, 82 times, 83 times, and during such market conditions, I think if you guys do check the US market, I think it's down by 300 points now. So market is very volatile now. You can quote it and say that it comes from COVID is still not yet solved in the US whatsoever, or maybe it's because of quantitative easing by the US. So I think there's too much reasons to actually pinpoint why the market is volatile. But of course, the price is pricey on this side. But with the volatile market, and if this company is a company that you think shows very good prospect, you can definitely dig deeper, ask more questions, and analyze more. And of course, with the volatility, hope one day that the volatility will come in your favor and make the share price a little bit more cheaper for you to take position if you want to invest in a company like ViTrox. But maybe I will throw the ball back to Shunbing. What are your thoughts for a company which has lesser risk, still have risk, but is trading at 83 times PE?
For me, of course, I think it's a bit high, even though the past few years might be a downtrend. I think since 2018, but what I think today is a very good opportunity for people who do short-term trading. Compared to you are looking into fundamental, like what we used to believe in. I think we still believe in but what I meant here is this type of volatility is a good opportunity even for people who believe in fundamental, because any single movement of news or whatnot, some good stock just go sold out and just go sell down, and then there's an opportunity for you to just enter. So and if you are patient enough, you will be able to catch it, and then you won't, because of whatever news that influence you, then you sold before it bounced back to the higher price. So this is something I learned. I mean, because Japan trading experience is much longer than me. He always say, if you believe this is the price, just go for it, and don't because of 1 cent, 2 cent, then you just don't trade. If 5 days ago your target price is $1.20, and today suddenly it go down into 1.21, and then or even go into 119, then you think maybe it can go down to 115, then you wait. you won't catch the opportunity, especially volatility like this. So take example, for example, if you are a strong believer in brewery business like Carlsberg or Heineken, maybe you miss the wave already. I think the lowest is going to 19 something. Now it bounce back to 21, which it has been trying to show this kind of confidence back to the market at what they usually did. Because I think a few months back they even dropped to 17, then it go back to 20 something. So it's about how you position yourself. You think this is the right price, you can just go for it, because this volatility gives you the opportunity. Maybe you enter, it become much lower. You just average down or whatnot, because you bounce back. But you don't anticipate like you go in, then next quarter suddenly it jump up. It won't. The market now is about V-shape, keep on up and down. So it's whether
Kangaroo.
how you can buy the spot at as closer to the V as this spot lah. But usually maybe you buy this spot or this spot, but at least a few times you will get this spot lah. But it will keep on bouncing. So I think it's an opportunity for us to accumulate the good share that we like. And then the market become the sentiment go to more rational, economy start to recover. You appreciate your act, even though sometimes you might not buy at the lowest point, but based on multiple action that you did due to this bounce, I think you can accumulate quite a good value of stock at the right price. This is my take. So, but of course, your money is limited. You also need to plan your strategy and what kind of thing that you think will return you the most. But I would say this few months until pandemic is over, it will always be fluctuating. Also driven by US or whatever, not certain factors. Suddenly, India come out with vaccine, for example, then everything jump again. So it's a very good opportunity for us to eye on the good stock that you have confidence with. When it suddenly sell down, just kill and then don't because of 1-2 cent you miss it lah. After a few years, then you thank yourself for all this action with courage.
Definitely. So I think good sharing by Junbing. Don't be too picky on the share. Volatility is your friend, and I think it's a bigger friend for value investors compared to trading. Trading, sometimes the trend will be against them, right? But for value investors, if you know that this is the price I will buy, if the price meet your expectation, just buy. And 5 years, 10 years down the road, you'll be thanking yourself for making such a wise decision. So I think that's it. We will look at any questions that you guys have. Okay. Okay. I think no questions. Okay. I think we have one. Hi there. Would like to hear your opinion on buying fundamentally good stocks. They are certainly never cheap. Do you wait and enter the market upon correction? But isn't that timing the market? This is a very, very good question. You need to draw a line to differentiate timing the market versus opportunity. How do I put it? If I want to give you an example, say for example, we talk about company like ViTrox. So ViTrox is a tech stock. If you want to wait for ViTrox to go for valuation like 20 times, that is impossible. That is timing the market, because company like ViTrox, they trade at a higher PE multiple. They wouldn't usually fall down to 20 times. But if you look at historically, ViTrox doesn't even trade at 80 times PE also. And the profit is also not pandemically driven like your gloves. So gloves, people keep saying coming quarters will be very bullish, which is true. You look at now, today, glove for top groups performance actually made 13 cents EPS. So you take 13 or 16 cents. 16 cents you times by 4, then they assume that, okay, moving forward 1 year, ViTrox is going to earn this much of earnings per share, and then they use a realistic PE, maybe PE 30 and maybe 40, and then they try to rationalize the share price. But for a company like ViTrox, they don't earn money based on pandemic. They earn money based on growing their business. No doubt it's a good company. It continues to grow. At the end of the day, if you look at historically, maybe they are trading at 50 times, 60 times PE. Today, they are at 80 times PE. So you might want to ask yourself, should I wait? Now the market is volatile. It's undeniable. There are opportunities. I'm not asking you to be more picky when the market is bullish. If the market is bullish, maybe you have to also let your pricing methodology and structure to be a bit more lenient, because everything is going up. Then you should not be too calculative on the price. But when the market is volatile like now, if you have the money on your hand, it's not borrowed money or whatsoever. This is your hard-earned money, and you can wait for the right price. Definitely wait for it. If 80 is too high, then maybe you can wait for something lower, maybe 70 or 60. Try to look back historically, what is the PE range that a company like ViTrox is trading, and from there you roughly know that whether the company share price is running further versus its earning powers and capability. So I hope I answer your questions. This is the line we draw to differentiate timing the market versus getting a good yield or a good price to ascertain that you're buying at a margin of safety. Okay, this is another very good question by Max Yi, asking on how to do averaging down percentage-wise. It really is up to you. Say, for example, I give you an example. Say if you want to buy company A and you're willing to, as a total portfolio, you're willing to spend, say, for example, 10K ringgit on company A. So you don't buy straight away 10K for company A. You do averaging down. So how to do averaging? Maybe for starters, you throw in 3,000 first. Today's price is nice. You throw in 3,000 and then you buy your first tranche. Then the second one, maybe you have to also look at how deep the company will drop. Is the company historically very volatile? But if it's normal kind of circumstances, maybe if it dropped 20%, then you can unload your second bullet. And then if it dropped another 20%, that means over from your original price drop 40% maybe. Then you unload your last bullet. So 3.3K, 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 then that's it. If it drops lower, that's it. you don't buy anymore because this is your game plan. You can buy other stocks. This stock maybe will take a longer time to recover. Then you have to look for other stocks. Or maybe you bought into a banking stocks. Banking stocks not going to be that positive during near term. Then you take your money and you buy more stocks that have potential higher chances of going up because of the prospects, because of the catalyst. And this is how you mitigate your risk. Everything you put into the same company, 10K straight away you buy company A, share price go down 40%, you have no more money to average down, and it becomes a paper loss, and your money is stuck there. You don't have the freedom to play around with your money lah. So this is how I would. This is just an example. Maybe you have more money, then you can split your purchase into more batches as well lah. So yeah, I hope I answer your question, Max. Definitely a very good practice to do dollar cost averaging down for good companies only. Lousy companies, chop straight away. So you have to, that's why we focus a lot on the company business. If the company is a good business, go down, you should be happy, you buy more. But company business not good, go up just because of a MOU, signing of a memorandum of understanding. No substance, no tangible results yet. That one you be careful. And if you think you do the wrong mistake, just cut. Do you think that US election is going to impact Malaysian market? If yes, how to mitigate the risk? I think definitely it's going to make the market volatile because markets don't know who is going to win. This is just the same situation that we faced back then when Hillary Clinton versus Donald Trump to become the next US president. And people were betting that Hillary Clinton will win, right? But at the end of the day, when the results come up, everyone got a shock because we have a madman in the name of Donald Trump becoming a president. The share price of the US market tanked. I think Malaysian market, all around, every market around the world tanked. Then people start to think, Donald Trump is someone who prioritizes US. He'll make US company great again. Then you see the US market from back then, since Donald Trump got elected until now, it has always been an uptrend. So coming Joe Biden versus Donald Trump, it will still always be 50-50, it will always be uncertain. And maybe a lot of investors out there are also waiting for the election time for the market to be a bit more agitated and also more volatile to make bigger purchases when the chance comes. Doesn't mean it will come. People predict it will come. And definitely keep a bit of money. If that opportunity comes, then at least you have money to buy when the market is volatile.
Okay.
So, yep, I think quite a great session. Finally, I would say of all the companies, tech one, I would say ViTrox is the best one lah. But the valuation, of course, is expensive. I hope you guys enjoy. If you have any other companies you want us to look into, lousy one, good ones, let us know in the comments. We will definitely take a look. And as always, same time, Thursday night, 9 p.m. You see you guys. Let us know how you feel about this company. And Chubing, anything to add on?
Yeah, I think next week maybe we'll do some changes. I mean, if you find out some interesting tech company, then of course we'll try to share. But I think today we are quite tempted to share Top Glove, but it's
I first also.
this scheduled to talk about ViTrox, and we have prepared the thing up front, so we just keep on it. But next week we will see any other interesting stock, or you guys are interested to ask us to talk about glove stock again. We can try to do it because our post in our website I think is quite old already. We have do a very detailed comparison among the big 4 glove maker in Malaysia, but there was a time where I think Top Glove still pricing at $7-8 before the bonus.
Before bonus.
So those were the time before the pandemic lah. So, but if you guys are interested in all those things, also can comment into non-tech company. We'll definitely cover it. If not, the next week we'll see any other interesting company that pop up throughout the week, and maybe we'll just pick that thing and share with you guys lah. Actually,
Okay.
we quite a few comment on UWC. Probably, maybe we can take a look on that as well.
Yep. Okay. I think
Okay,
UWC also a very interesting company.
I think that's it for today, lah.
Okay. I think one last questions. Asking about a competitor similar to ViTrox. I think
They are.
ViTrox, they are not totally competitors, but some business segments there are some competition lah. So companies like Penta, I think Penta is there are some segments between Penta and ViTrox that they compare with each other. So yeah, I think a lot of people have been commenting FP Group and also UWC. Yeah, definitely one of these company or other companies, more exciting one that crops up 1 week down the road. But as of now, either FP Group or UWC lah. But along the road, anything happening, any companies you want to PM us or drop us in the comment, let us know. Definitely will prioritize the best of the best for you guys. So as always, thank you for your 1 hour. If you like it, like the video, share it to your friends. Hope that they also get educated on what ViTrox is and what is the valuation, and also let them know what company they want us to talk about next week. And as always, we'll see you guys same time, 9 p.m. every Thursday. And thank you for watching Kaya Plus Not So Late Night Show.
See you.
Bye bye.